Okay, next is cost classification. In business, we have got literally hundreds of different types of costs. So to understand these costs, it's very important that we put them into certain categories. Okay, so what we do that we put cost into different groups or into different categories. I mean, it's very understandable. If you've got 100 people, you can say, okay, men on this side, women on that side, so you understand, okay, there are so many men and so many women. Or probably you categorize things in some other ways, people who are less than 25 on this side and over 25 on that side. So similarly, we have a lot of costs. So to we cannot handle or manage them individually. What we do that we put them into different categories, into different classes, or into different classification. So we say cost classification is the grouping of cost under common characteristics. And types of cost classification, what are the types? We say by function or by behavior. So these are, so what types of cost classification we do? We do it, we group them, these costs, based on either by function or by behavior. So what is function? For example, any activity performed in business is a function. Any activity performed in a business is a function. So production costs. So there are so many costs which are related to production. I'll just name some of them. Raw materials, fuel, which is used in the production process, electricity used in the production process, rent of your factory, maybe, transportation of raw material, and salaries of the production staff, and so many other costs which you all put them together into the production cost. So you say, okay, this cost is production cost. So 20 costs, they go into the production department. Administration cost, for example, rent of your office, salaries of your accountant, salaries of some other office staff, electricity, water, gas, utilities, whatever, internet, telephone, office stationery, all of this, printing, postage, all of this together is called administration cost. Finance cost, the accounting department and the related costs. Research and development costs. So there is a department, research and development. So the research and development department is usually engaged in improving the existing products and developing the new products. I will not go into a lot of details, but just for an example, that Samsung, they make cell phones. So I don't know what is their cell phone now, Galaxy Note 10 or 11 or 12, I don't know, whatever it is. Maybe iPhone 13 is there in the market, but you know that there is a team which is working on iPhone 14. So maybe in 6 months' time, they will introduce a new model, iPhone 14. So who is working on that new phone? Who is working on that new technology? Who is working on that new product? That is the research department. Then you have a distribution department which distribute the products, because you have made the products. That's understandable, but the next step is, how do we take these products to the customer? So in some businesses, distribution cost is not significant because they don't distribute the product to customers. Like a bank, they don't have any distribution costs significant. Or insurance companies, they don't have very significant distribution costs. But if you think about Coca-Cola company, they have huge distribution costs because they have to, transport the product, the Coca-Cola, the cans, to thousands of different shops and restaurants in your city. Whichever city you are living in, there are thousands and thousands of shops which sell Coca-Cola. And every time you go to the shop, they never say that, oh, I'm sorry, we are out of stock. Every time you find the product there. So somebody is making sure that whichever market, supermarket, small, big shop, corner store, wherever you go, you will find the product. And that is the distribution department. And they have a lot of costs. They have warehouse costing, they have, vehicles, loaders, drivers, fuel, transportation, insurance, and so much and so on. Selling costs, this is your sales department. You have people who sell the products. You don't only make the products, you need to sell the products. So sales department and the costs which are associated with the sales department. For example, salaries of the staff, salespeople, you give vehicles, or you give bikes or probably cars to the sales team. They go and they sell goods. Then you do some exhibitions. So they, and you do some, you know uh, do some activities, exhibition activities, etc. A lot of selling costs there are as well. Then production cost, now they are going to explain. Now these one which I already have spoken. Now we are going to speak very quickly one by one again. Production cost, we want to make a pen. In order to manufacture it, we will need to do some expenses. For example, plastic, labor, electricity, factory supervisor salary, factory's guard salary, factory rent, etc. Thus, all those expenses which directly or indirectly involve to convert raw material into finished goods are called production costs. You've got the all costs of production are further divided into three categories. So, like, remember I told you that there might be 20 costs, there might be 20 different types of costs within the production department. All these are called production cost. But then this is again 20. We further divide them into three categories. We call it material. So probably we are using wood, we are using metal, we are using two types of metals, probably we are using aluminum, we are using some other types of raw materials. So all different types of raw materials are put together and you call it material. Then you have a labor cost. Different types of labor you have the unskilled workers, skilled workers, supervisors, production managers, all of them together you call them labor cost. And then you have other expenses. So these 20 costs, or 25 or 30, whatever you have, you further divide them into three categories. You call them material, labor, and expenses. Administration cost, office expenses, telephone expense, stationery, computer, head office, admission office, service business, reception, whatever. Finance cost. You need finance to run your business. You visit a bank and request for bank loan. Let's suppose $1 million. Bank will never lend you money free of interest charge. You must pay some interest on that, and that interest will be your finance cost. Like, interest expense is called finance cost. Always remember, a business uses different types of resources, uh, and every resource has a cost. For example, when you set up a business, you take an office on rent and you pay the rent. This is a cost of your place. Then you hire some staff and you need to pay them salaries, and this is the cost of the staff. And then for running the business, you also need some money, you need some capital, and that capital can be taken from the bank. The bank will charge interest. There is a cost of that. Even if you invest money, your own money, you don't take loan from a bank, you put your own money. When you give your money to the business, you also expect some return. Otherwise, you say it is better I put it into the bank. You are not putting the money into the bank. Bank gives you 5% interest. You take money out of the bank and put into your business because you expect more than 5%. Because 5% you are earning in any case. If the business does not give you anything, why would you invest money in the business? You will keep the money in the bank and take 5% from there. You only take your money out of the bank and put into the business because you expect to make more than 5% what the bank was giving. So finance cost was there. Here we are not talking about your individual, your own expectations. When we talk about finance cost, it is specifically related to bank loans and the interest on the bank loan. That is called finance cost. Research and development cost, like I told you that, and this is, by the way, a significant cost in a business. It's a huge, one of the most, one of the biggest costs especially in the innovative businesses, because they keep on producing new products. Imagine the car industry. Every year or every 2 years, they bring a new model, and there are so many new features about about the car safety, design, and comfort, and whatever, and somebody is thinking about those features, somebody is creating or developing those features. So these are called research and development costs. Selling costs. Let's take example of pen we discussed earlier. When its manufacturing is done, the next step is to sell the pen. You don't just produce, you need to, next step is to sell. And the company have different options. You have shops where the pen is being sold, all expenses related to the shop are selling expenses, online selling costs. Companies sell it to different suppliers as well. So exhibitions and online selling and so on and so on. Advertisement cost is there. Discounts are there. Sometimes, by the way, discount is also a cost, and that comes under the selling cost because this is to attract customers. A product has a price of 20, you tell a customer you pay 18 and I will give it to you. So you leave $2 to sell the product. And that $2 comes under the selling cost, the discount. Advertisements are there, okay? All these, they go into the selling cost because you need to sell the product in any case. Distribution, I explained, distributing the products to different spots and different places. And that includes warehouse, salary of the people, fuel, drivers, and van depreciation charge. Depreciation, I'm not sure if you are familiar with. Depreciation means that wear and tear, when something gets old. So that loss in the value is called depreciation. In a very simple way, this depreciation we talk more in, in financial accounting, but just for not leaving it untouched, what is depreciation? You buy a mobile phone for $500. You use this phone for 1 year, and after 1 year, the selling price, the old phone, now this was the new phone. You use it for 1 year, it becomes old, and the value of the old phone is $300. So where is 200? This 200 is depreciation. It is kind of an expense because it is a loss. It is a loss in the value of your phone while you were using it. It is the loss in the value of your phone while you were using it. And losses are expenses. The same will happen with the distribution. Remember, we said distribution. So they bought these trucks. One truck is for $50,000, and I use it in my distribution department. In the distribution department. Then what happens? That then 1 year finishes and this truck becomes $40,000. So the truck loses 10K in value. This 10K is depreciation. And this is actually an expense to the business for selling the goods or distributing the goods. Next is subdivision of product cost. This we'll do in the next session.